Man, YouTube is back. I'm back with another video. It is Rick Take Profit, and today we're going over the April 2nd trading day of 2025, guys. So I'm gonna let you guys know from the jump. I couldn't really trade today because what's it called? I had to take a test from like market open till close, damn near. So I'm gonna tell you the ideas of today and what I would have done if I was trading. It's completely honest, not like I'm cherry picking. I'm gonna just tell you exactly what I would have done if you follow the strategy. If you follow the strategy and do not break the rules, guys, things happen, okay? This is a real raw video. Things happen. I'm going to show you exactly what I'm talking about right now. So we're on NQ, and I also want to point out today, for some reason, my chart was like 15 minutes delayed. It was delayed over for futures, but not stocks, which is weird. So let's get right into it. Okay, we're on the 5 minute chart. Market opens. Let's go through these levels real quick. Here we have pre-market highs, and actually right here, well, like you could say right here we have pre-market lows, but it's still technically pre-market. So that's why I have this line marked out. Okay, guys, you have to always mark out your levels. This is key. We're on the 5 minute, by the way. So hop in 1 minute. Okay, let's hop in 1 minute and see what happened. Boom. Market opens right here. Keep in mind the low is right here. Market opens, goes high, candle comes down, boom, market comes down to here, sweeping pre-market lows. Again, sweep pre-market lows. You could either say swept to here, or you could say swept there from here. Same thing, guys. Same thing. Okay, we see market get swept. Strong move to the upside. Boom, nice. Boom. What do we see? Fair value gaps. That's all we're looking for. Is just the fair value gaps. One, boom, boom. So many fair value gaps. What do we see right here? This is the latest fair value gap. We see this fair value gap form. Nice. Market came up. Okay, let's move this to the other side. We see this fair value gap form. We see this wick come in here. Boom. You see this wick come in, taps it, and immediately comes back up. This is nice. You're going to want to enter a trade once you see that reaction. Okay, enter the trade. Go for the 1 or 2. Boom. Let's do the math on this. Let's do the math on this. Let's say you enter like on the close. Say you entered on the close around here. Boom. You enter on the close of that candle just to be safe. And then what do we see? Oh, whoa, 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 what happened? Um, okay, let's just do that one more time. Why can't I see it? We're having technical difficulties, guys. Technical difficulties. What is going on? How do I pause the recording? There should be a way to pause it. It's not there no more. Yeah. I'm gonna have to crop this out. Holy. It's April 2nd, right? Okay, good. Delete this. Okay, so boom. We enter here for the 1 and 2. We enter here, around here. We enter here for the 1 and 2. Our stop loss is a little bit below the fair value gap, which is good. As you can see, you almost get wicked out. Now, guys, here's how you handle this. You only close once a candle closes below the fair value gap. Once it closes outside of fair value gap, that's when you make the decision, guys, not inside. Although you can go inside to get a little cheaper entry, but you a lot more. Okay, you're risking taking a loss pretty much. You don't have that security that you have once you wait for the confirmation, guys. You don't have the confirmation. And some people would like to put their stop losses like a little bit below, like down to this level or like up to here. But it's really up to you on how you handle your risk, right? It's really up to you how you handle your risk. As you can see, it's still 2 to 1, so pretty good risk reward. Now, as you can see, market comes in and we dip back into the fair value gap. We get a retest for the move to the upside, which is splendid. Okay, this is nice. But what I want to talk about today, guys, let's go to QQQ because this was a trade that I took as well because the futures was delayed. That first trade was merely an idea. It was only an idea, and now I'm going to show you what I really mean by things can happen, guys. I'm being honest in these videos. So boom, we see this market open. We're on the 1 minute, by the way. 1 minute. Okay, let's do this one more time. What do we see? What do we see? These lows are getting swept. Okay, these lows are getting swept right here, guys. These lows are getting swept. Let me just do this so you guys understand it a bit better. Okay, boom. Swept. Market opens. Boom. This area swept. Okay, swept. Market comes up, we look for the fair value gaps. One, two, three, four. Boom, we have this fair value gap right here. Price forms, it goes up, taps in and wicks in. Let's say you waited a little bit for better like dip in instead of like a wick. Boom, candle comes in, closes in. Bow, nice. Candle comes in, nice. What do we see? It comes down a little bit. Buyers came through, pushed the price up. Here's where price closed, right? Here's where price closed. You enter somewhere around here. Boom. Okay. Put your stop loss a little bit below the zone. All right, give it some breathing room. Okay, nice. And what do we see happen? Strong move to the upside. Strong move to the upside. Very strong move to the upside. Down there, 1 and 3. This was an easy 1 and 3. Okay, easy 1 and 3 right here, guys. Just want to show you guys that. Now the next thing I want to show you guys. Let me just delete this, or I could just make it smaller. There we go. Next thing I want to show you guys, right? Now let's say you enter this trade and you exit this trade, but you see a fair value gap form again and price dipped into it. What do you do in this situation? You're gonna go long. You see the setup, you're thinking, okay, 2 trades and then I'm done. You enter in long around the zone, the candle closing, blah 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 blah. You enter in long, your stop loss is a little bit below the fair value gap. Price came up, okay, looking good. Boom, strong move down, very bad, and we form a bearish fair value gap. Not looking too good at all. Price comes down, and what do you see here? It actually closed outside of the fair value gap. And what do I say, guys? When this happens, you normally want to exit your position. But in this real life, real world example, what do we see happen? There's a chance you would have got stopped out here. Price came up into this bearish fair value gap and respected it and actually went down again. Price came down twice to this area. And as you can see by this wick, it actually went down even way below, down to here, into this fair value gap. Okay, went down all the way down to this fair value gap. Okay, guys, I want to show you guys this. If you entered up here off of this reaction right here, you would have lost. You would have lost. Okay, no matter as much as you see the chart actually kept going into your favor, right? It actually went up. You gotta understand, things happen, guys. The market dipped down to here. Why? Who knows? Trump was speaking after market close. Nobody knows. Okay, I can't explain that, but just know these things happen. And the best way I could say to handle this would be, let's say you exit your position around here for the loss. For a small loss, this is a 1. And keep in mind, we always go for 1 and 2s. 1 and 2s meaning, let's say you make $100, you're risking $50. Okay? So if I make $100 and I lose the next trade, I'm still up $50 on the day. This is why risk to rewards are very important. The higher the risk to reward, the better. The lower, the worse. Okay, guys? Understand this. And the reason why I'm saying 2 to 1s is because it's easier. It's a little bit less riskier than trying to hold out for like a 1 and 5 or something crazy like that. Boom. It's crazy in the future. I might be a complete opposite. I might be getting like 1 to 10s, 1 to 12s easily. It's all in your strategy and your risk to rewards, how you handle that. Yeah, your win rate, all that. But let's get back to this thing. As you can see, let's hop into the 5 minute. Boom. What do we see on the 5 minute? Let's delete this fair value gap right here. So boom, we take this loss. But what do we see on this 5 minute chart? We see a fair value gap form. We see a fair value gap right here. This is a 5 minute fair value gap. Now, if you lost right here, you could have entered a position here. Once you started to see how it opened here, dipped down, and then you see price start to come back up, you could have entered along and got a quick little scalp. You could have entered along and could have copped your money back pretty quick. Okay? Now, let's say you took the loss even on this one. True. If you somehow managed to take a loss on this. Let me try to move the stop loss up. Right? You could have easily got a 1 to 3. Easily got a 1 to 3, okay, guys? 1 to 2, easily got that. Just off of one candle, off of 4 minutes, pretty much. Could have easily got that. Price came down into where? God knows why price came down here. But what do you see happen? Price continues to go up, go up, go up, go up, go up. But what do we also see here? Fair value gap. It taps into it. It doesn't close, so it's still valid. Price came up. You could have entered long again right here. Boom. Easy money. I clicked the wrong button. This would have been easy money right here, guys. This is not rocket science. Why is it paused? Why is this so elongated. Okay. Boom. This is not rocket science, guys. This is not rocket science. Easily one and twos off these fair value guys. This is the play that I'm trying to show you guys day in and day out. Record these videos the same day, no matter how tired I am, no matter how much I just want to lay down and chill. I record these videos as proof and evidence and as a recap. You know, this is kind of like my trade journal, pretty much. So as we see here, price came in, came back up, perfect, beautiful price action, guys. Absolutely beautiful price action, guys. And with some slippage, price did come up, but we're not gonna count that. Just off of these few trades and the start of the day, half of the day, pretty profitable. I'm not even gonna try to get into how much money these plays are because I didn't take them today because of that stupid test. It wasn't online, so I couldn't trade, bro. This is the 5 minute. Let's go to the 1 minute on futures. I just want to double check something. Fair value gap, blah, 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 blah. What do we see here? On the 1 minute, this fair value gap forms. Price came in, tab, so you go long. Stop loss is right here, 1 and 2. Let's see how much you would have made. Trade, create new order, buy. TP up to here. Your stop loss is down to here. You would have made $1,000 off of this move right here. You would have made $1,000, but let's keep in mind you are risking like 500, and that's a little bit too much for a prop firm account. But the way I guess you could fix this is try to get a better entry. Like keep in mind, I'm putting my entry here because we see this. Hold on. Put my entry there because we see this candle wicks here and then comes back up. And let's say you wait for the close or something, right? And then this candle opens down here. No, this candle opens up here, but like I don't know. Let's say you snag an entry down here or something like that. But the better entry, the best entry you could take is this entry right here. Why? Because we see market came up, okay, which is nice. Then we see a retest of it right here. Now what do? Retest, and we see the market tried to break below, but it couldn't close below, which is a very bullish sign. And then immediately came up. This is nice. Boom. You would have entered right here. Risk stop loss right there. And you would have made $1,100, $1,200. Wait, no. You made $1,400. I'm tweaking. You would have made $1,400 pretty easily. Right? You would have made $1,400 while risking $400. Okay, guys. You see how entries have a big deal. These entries, the better your entry, the better your risk rewards are going to be. But you're also risking a lot because you're not getting that confirmation. I mean, you take this entry here. It's a pretty sloppy entry, I'm not going to lie. You're still winning, but you're risking that ratio, okay? You're risking that ratio, but you also have that confirmation. It's just part of the game. Nobody's perfect. You can't predict the market. It's part of the game. The idea is still played out, but that's just the way you can improve on your trading abilities, okay? Now, as I'm doing these recaps, I'm starting to see more and more ideas form. What do we have here? 1 minute fair value gap. The reason why we're not using this one is why? Candle close below, we do not use those fair value gaps. Even though it would have been successful, we're just not trading those fair value gaps. Just because that's the rule. That is the rule, guys. But we see this 1 minute fair value gap. Choppiness. Price comes in, taps into it, and what do we see? Boom. Market starts coming up. This is another quick play that you could get. Probably make, a band off of one contract. Right? You would have made a band off of one contract pretty easily, bro. Quick 1 and 2. Is it 1 and 2? 1 and 2? Yep. You would have got the 1 and 2. Trust me, you would have got the 1 and 2, yeah. Especially because this candle on the wicks, you would have got the 1 and 2 for sure. Price came in, closed below, which is not a good sign, so I would not have entered. But it still played out. It still played out at the end of the day. And what time is that? It's 10. I'm not gonna lie, 10 o'clock. Yeah, you just keep looking for entries. It's around like, I don't know, around here it's like, bro, what even setups? I'm not even seeing any setups. I'm just looking at rubbish right now. We're just seeing an uptrend happen. Okay. Maybe on a 5 minute there's probably like a setup on there, but yeah, nah, even this is like pretty sloppy. Like, I don't like those wicks. Those wicks are crazy. Those wicks are nasty, man. Books are absolutely nasty. Okay, so yeah, we see price come here. Wait, hold on. Don't tell me we're doing the analysis wrong the whole time. Guys, I forgot my biggest rule. You have to wait for the pre-market to sweep the liquidity. Wait for the market to sweep the liquidity of the day, guys. Holy. What time is, how many minutes are we in? 15 minutes in? Holy. Now, if you stayed 15 minutes in, you're a real one. No cap. Bro, okay, market swept here, and then you start looking for the setups, guys. And then you're gonna want to look for the setups. See this for value gap, boom. Look at this play. This is nice. But let's be real. I wouldn't wait for this entry or taking the play around here, and we probably would have got cooked. Not gonna lie, we probably would have got cooked. Price came in here, down. Oh, yeah, there's a chance I would have probably entered here, but no, I would definitely would have got stopped out. For sure, I would have got stopped out. This was the nice entry right here to maybe try to make my money back. Probably would be good. See here, sweep liquidity, boom. Market came down. Boom, taps into this fair value gap and proceeded to continue to go up. Nice. And then Trump started speaking. Oh, that's why, because it was a different day. It was a different day. Okay, we're good. We're good. We're good, bro. We're good. Wait, that was yesterday. This was yesterday. What trade did I take yesterday? Oh, this is NQ. That's why I don't have it. We trade ES. I forgot to tell you guys. I'm looking at NQ today. The other days I was trading ES. So that's why. Okay, we're good. We're good. We're good. Thought we were cooked right there, but yeah. So yeah, like after 12, it's like I don't really look for trades, but there's definitely opportunities. Look at all these candles. There's a lot of opportunities, ups and downs, so you can make money. Like think about it, we got long right here. Imagine if we just held it out all the way up to here. Pretty easy, but you know. So yeah, I think it's the end of the video, guys. Stay tuned, drop a sub, subscribe, enjoy, and yeah.